Hey, what's going on, guys? Leo. So we got to talk about some stupidity going on around Ethereum. And I say stupidity because, I mean, that's really what it is. So there's this trend emerging. We have these alternate layer one blockchains that are popping up from companies that are wanting to build their own custom infrastructure, their own custom blockchain. And I think this really misses the entire point of Ethereum. Ethereum functions as the financial operating system for the entire world. It's what everybody else is supposed to build on because it allows for seamless integration. You're leveraging its network effects. And essentially what these companies are doing is they're saying, hey, we want our own custom infrastructure to do stablecoin payments, for example, like Circle and Stripe. They just did that, or at least that's what they said. You can build all of that on a layer 2 on Ethereum, but it's within the Ethereum ecosystem, so you're able to leverage your business, you're able to leverage the network effects, which we're going to get into in here in a second, to grow your business much more quickly. So if Ethereum is the internet or an operating system that everybody else in the world can build on, by other companies launching a layer 1, this is effectively like them saying, hey guys, we're going to build a stablecoin payment processor, but we're going to build an entirely new operating system that you have to download to your computer and get set up. And there's going to be a lot of friction if you want to use it because you got to disconnect from your old operating system to get onto ours. It's silly. Ethereum is the unifying force among all of these payments, all these transactions, all these RWAs, tokenized assets, everything. It's like going out and creating a bunch of layer 1s, you're creating this fragmented system where you're going to have a bunch of stablecoin payments over here that cannot easily interact with this other network. Or if you do, you've got to use this bridge thing, and bridges get hacked. So you're introducing a whole lot more risk to your business. But let's take a look here. Let's just focus on the fact that this will hurt their businesses. So I made this chart to kind of explain what I'm talking about. And so this is the Ethereum ecosystem, and you have these little green circles here. They represent layer 2s. And within each of these layer 2s, there's another network effect, right? So for example, Base, they have like Zora, they have all the applications and everything that they're building within their layer 2. But what the Ethereum roadmap is going to do is it's going to introduce interoperability, which means that the Base layer 2 can interact with Amazon. So let's say that Base has a stablecoin, look like USDC, and a user that has USDC on Base wants to buy a product on Amazon. So they just buy the product on Amazon's layer 2, done. And then let's say that it's connected to a smart contract that interacts with Fidelity. So whatever profit that Amazon seller is making, it automatically goes in and it purchases an index fund. Right? So this is the power of network effects. This is the power of having a cohesive system. Whereas if you have a bunch of isolated layer 1 chains over here, your business isn't going to grow as much because it cannot interact with all these other business opportunities. That's what network effects essentially are, is it's the ability for you to have more opportunity to grow. And the way that companies grow is by using leverage. In traditional finance, they'll borrow money to be able to leverage themselves to maybe buy more ads, buy more product. They're able to grow faster. But if you're talking about in blockchain space, you leverage your growth of your decentralized application, your layer 2, whatever it may be, by tapping into a larger network effect and being able to grow. Because if you start building on the Ethereum ecosystem, well, suddenly all these other users that Amazon brought in, that Fidelity brought in, that Visa brought in, Sony brought in, those customers now also become your customers, or at least the potential is there for it. Whereas if you're siloed over here, you're all alone, you're starting from scratch and you've got to onboard people very slowly. And frankly, you'll end up failing because you will not be able to keep up with the Ethereum ecosystem's network effects. And the reason that this bothers me is because it irritates me because all you're doing is slowing down progress. You are going to convert to a layer 2, end of story, just because of how strong the Ethereum ecosystem and its network effects are. This is like a company refusing to sell products on Amazon, and they want to build their own website. They end up getting hardly any traffic, and they're like, well, I guess we'll sell on Amazon. Just do it. Just start building on the Ethereum ecosystem and start making more money from the get-go. Like, what are you doing? Anyway, so rant's over. So just in RWA's tokenized platform Open Eden partners with BNY Mellon to manage and custody assets backing its Moody's A-rated tokenized U.S. Treasury Fund T-bill. So that's interesting. So we're going to listen here to this is an interview with CEO of Ethereum, Vivek. So let's go ahead and listen to what he has to say.
How do you put the pieces together and say this is where ETH can go?
I think we are in the process of re-rating it to become global infrastructure. When ETH is the infrastructure that the whole world, both financial and non-financial, all businesses settle on, and we put $700,000 as a target. A lot of things have to happen to get there, but I think a $10 trillion asset is not out of question for global infrastructure. My target's higher than anyone else's, but that said,
80K is definitely up there.
706K is really up there too. But
so if you want to read about that report, go to ethdigitaloil.com. It's like a 30-page report that was put together. But essentially it goes over and it uses comparables to value Ethereum, because whenever you're talking about a new emerging market, a new emerging asset, essentially the best way that Wall Street knows how to tackle that is they use comparable analysis. So they look at things like, okay, well, this is a decentralized commodity. So what are other commodities valued at? What are other assets that we can compare this to at full maturity? What could this be worth? And it puts it potentially at $700,000 per Ethereum. So if you want to check out the full podcast, you can go to @ZGUZ, Zach Guzman, and he is the host of Coinage Media. So go ahead and check that out. So now let's go ahead and check on the price here. So, as you guys know, we've been in this big channel here that we've been following for a very long time, and it's really remarkable how accurate it has been in tracking price. So I'm going to go down to the weekly time frame just to show y'all. If you recall, back in April, I pegged the bottom here, and we've just been tracking this fractal from the prior cycle very, very closely, where you get this V-shaped recovery. And we also have this large bull flag that I've been talking about for quite some time, and we've finally broken above that. So if you come in here, we can take a look if it will load. There we go. So one possibility here is that we're going to bounce off the all-time high, come down. I don't know that this will happen. I would say there's a pretty fair chance that this could happen. If we just kind of wick off the all-time high there, we could very easily break through it like the fractal pattern did. But the other option, and the more painful option for the bears, is that we pull back from the all-time high, we bounce off the bull flag, which is now support, and then we break the all-time high and continue higher. So a bunch of people potentially could be loading up on shorts here, and they're all happy. Oh, it's over. It's going back down. And then it just rips and it just liquidates them all and just keeps ripping higher. The other thing I want to show you is a smaller channel. We're on the daily time frame, and what you'll notice is that it's fitting price very tightly, very neatly here. So we're just starting from the bottom. I like to come through where the candle body had closed at, so that's ignoring the wicks for your first pivot there. And what you'll notice is that we've just come up to the high side of this channel, and we're coming up to the high side of the all-time high. So there's going to be a resistance there. And so that's all that we're really seeing. If we're seeing a little bit of resistance, we're pulling back. We could come back down, like I said, and bounce off the top side of this giant bull flag and then rip, liquidate all these happy shorts that are thinking that they're going to ride this thing back down. And that would actually be kind of satisfying. I almost hope that happens. Because it's just more fuel to go higher. But ultimately, we could break the upside of this channel. I think that's less likely. Talking about this the little black channel that we have going up here. What we could do if we're going to go higher is that we could kind of just drift sideways, right? And that gives it time to consolidate, and then we have more room to push higher again. But if we do pull back, right, that's going to, let's say, take about end of August, maybe beginning of September, and then we would get another really big push up. So what that would look like, if we come in here, we can take if we are going to start pulling back, we kind of come back to here, drift sideways a little bit, and then boom, we have clear skies to rip all the way up to, 7,500, wherever it is that we're going to go by the end of the year. So I guess I can just extend this out, right? So end of year, we're looking, it depends on how quickly it moves up, but we're talking anywhere from 7,500 to 12,000 by the end of the year. And I know that's a wide range, but I'm just basing this off of the market geometry and the current channel that we're moving up in. It's going to depend a lot on how this price action unfolds. So one case that could happen is that it moves up to the 7,500 range by beginning of November, and then it pulls back and kind of drifts sideways for a month, and then it goes higher in the beginning of 2026. So just kind of depends how it plays out, how soon we get there by the end of the year. But right now I'm thinking anywhere from 7,500 to 12,000 by the end of the year. So that pretty much wraps up this video. You have any questions, leave them in the comment section down below, and I'll talk to y'all soon.